Alright, so I'm gonna go ahead and show you guys how I caught 1,180 points on Bitcoin. Um, First I started off on the weekly. What I did was basically I looked at the trend first, the daily bias, and I decided to go down. So from the weekly down, I looked at the weekly and I saw that it was going to uptrend. Basically the low that took out the high, I know that it's an uptrend. Alright, so this low right here took out this high over here, and I'm waiting for it to come back into discount, so that way I'm able to take the trade and buy up again. But right now on the weekly it's uptrend. So daily, alright, so on the daily, I'm looking at where prices are right now, and I see that prices has been trailing down. How do I know that? Basically the high that took out the low. As you can see, this high right here took out this low, and then went back up into premium, and then took out this low right here, and now it's going back up here, and now it's trailing down. All right, so I'm looking at this place right now. I took this trade over the weekend on Friday. We go down to the 4 hours. So on the 4 hour, I saw that it's still trailing down. But now I realized around this area over here on Friday, September 6th, 2024, around this area right here, all this price action wasn't there. It's because I'm recording this video on Monday, the 9th, so this already happened. But I took the trade from over here. I see that everything is going down. Again, the high that took out this low right here, and this high took out this low right here, so it's trailing down. I'm just waiting for it to go back. So as soon as it got to this area, I'm thinking, okay, since it already took out this low right here, it has to come back into premium for me to take another sell. Alright, so I'm expecting it to go back up. Alright, so then I went on the hour. Okay, let me put a line. Let me put a line around Monday. Okay. So let's just imagine that none of this past this line has happened yet. Alright, so I'm expecting. I saw this around Friday because I took the trade around Friday, around 7 o'clock. So 1900. So Friday the 6th, 1900, around this area right here. That's when I took the buy up. How did I see it? Like I said, on the 4 hour, right? I was expecting this to come back up. All right. So on the daily, right? I saw that on Friday around here, Friday September, on Friday September 6th, I saw that price came down here. Alright, so I'm expecting it to pull back. So I go into the 4 hours, and I see this from here to here. I draw the line. I draw the square, the rectangle, excuse me. And when I draw the rectangle, it's from this. It's from up here, this fair value gap up here, to this fair value gap up here. Alright. So this price already happened. So remember, I took the trade around this time around here. Alright. This price action already happened. 12 o'clock was like what? 12 a.m. This was like 12 p.m. in the afternoon. So I took so I drew out the fair gap, the rectangle here, throughout this fair value gap right here. And then I waited I was expecting the price to come up here into this area, alright, and then drop, alright, but price never happened yet, so I waited. Alright, so I took the trade around here, okay? Like I said, price has to come back into this area because it already took out this low, alright? So what I'm expecting it to do is start trailing up. So in order for me to take this trade, alright, I waited until 7 o'clock, which was the start of basically Tokyo session on the weekends for Bitcoin. Remember, guys, crypto is 24 hours, so it doesn't close like the regular markets. So you could trade these on the weekends. They move the same way as any other pair. It can move very volatile as well, but like I said, you can still trade it on the weekends. So I waited as soon as price was printing and I saw it was going higher and higher. I waited and I marked this up. So I came down on the 1 hour and I took out, I made this a little bit more tighter. I found another fair value gap on the hour from here to here. Alright, to tighten it up some more. Alright, so at this point, this huge fair value gap right here, I didn't need it anymore. So I just pushed it up right here because I'm tightening it. So I'm expecting price to come up to here at least, and then maybe even drop. But by then I'm already like out of the trade because I'm coming up to here. So what I did was I went into the 15-minute. Alright. I saw price as soon as price right here. Like I said, this is where I took the trade. So let's zoom in to see why I decided to take it and why I thought it was going up here. Alright. So liquidity was taken around this area. Right. So liquidity was taken around this area. Right? And when it was taken, it flew up. Alright, it displaced up right around here and here. Pretty sure if I come to the 1 hour. Okay. When I come to the 30 minutes, same thing here. I saw it started, as soon as it took out liquidity, it went back up. And then I waited for this gap to form right here. Let me zoom in so you guys can see that better. This fair value gap around here, I waited for it to form, which showcased that, hey, price wants to shoot that high. So all I did was I drew a rectangle around this right here and this right here. These two fair value gaps right here. Well, this one fair value gap around here, and then I waited for price to come here and I traded up. So around here, around 1900, which was around 7 o'clock, I knew price had to climb high. So what I did was I went to the 15 minutes again. And I saw that it went right into this fair value gap right here. So if I tighten this right here like this, you can see that this fair value gap right here was respected. As soon as I saw that, I knew like, hey, this is going back up. This is going up. This is going up. So I decided to enter right here. I entered right here and let me take out. I entered right here. And then I took my stop loss below here. Put my stop loss below the fair value gap hit. And then my take profit was up there. Alright. Alright, so as soon as it went into the fair value gap, I held. I put my stop loss down here. Alright, so as soon as it took out liquidity, it formed the fair value gap around this area, and I entered here, and I held for 3 days. So from Friday to Sunday, I held the trade, and if you look close, you can see that it came close to taking me out around here, but it respected this breaker and fair value gap. So all price really did was return back into this breaker and fair value gap and shoot up on Sunday. To take this out and react off this fair value gap, it dropped a little bit and then shot out. But by then I'm already out the trade. Already got all my profits. I already secured my profits, so I don't care where it's going at this point. That's how I caught 1,180 points. I could have caught more, but this was perfectly fine. I got out. I was satisfied with the amount. Alright, and yeah, so if we looking in here, why would this have come down is really simple. So if I bust out a trend line, if we're trading off liquidity, we are going off of it respecting that it has to take out retail traders before it moves up. It has to take out retail traders before it goes up. So literally all it did was start taking out retail traders and then going up. So this right here would be a trend line. Buyers were winning too much. So Saturday came around 12 a.m. It was like, okay, you know what? Yeah, buyers are winning so much. Let's take these guys out. So I decided to drop out. And notice how I just took out all this trend line right here. So whoever was in the trend and I entered the trend, it took them out, right? It reacted off this, again, this breaker right here, okay? It didn't even take out the initial start of the trend. It just had to take out this just a little bit, right? Just take out everybody who entered the trend. Then it stopped, formed another fair value gap right here. I don't know if you guys can see it, right around this area, to indicate, hey, I want to go back up. Once it did that, it formed more liquidity. See that? What that look like? Trend line, right? Decided, hey, I want to take these guys out too. Let's form more liquidity during Saturday. So that's what it did. Form more liquidity, right? Then 8 o'clock came, dropped. It reacted off this fair value gap right here. This fair value gap right here. And dropped. Took out all the liquidity it formed on Saturday. And if you had a bad entry on Friday, it took you out too. Why did it do that? Because it had generated liquidity. And what liquidity did it generate? This relative equal lows. So it wanted to just take it out. Everybody who decided, hey, I'm gonna enter the double tops, double bottoms. Everybody who said, hey, I'm gonna enter the double bottoms, and thought, hey, this is gonna be support right around this area. It decided it said, nope, I'm gonna take everybody out first, as you can see right here, right? And then Sunday came, and it did the same thing. What are these right here? These right here would be relative equal highs. So everybody who had entered the sell here, because any retail trader that entered the sell here with the double tops, right? They decided they wanted to take them out. So it formed the double tops and then took out the double bottoms just for it to form another fair value gap around here, right? Came back in, shot up, took out all the double tops here. Everybody who thought I was selling all the research traders I thought it was something came up, took them out, and finally hit, take profit around here. So as long as you held this trade and stay true to your analysis, you was gonna win. Cause they have to come up. They have to hit this fair value gap. Alright. Thank you guys for watching this video. I can't wait to see you guys in the next video. Thank you.